Hello everyone and happy new year. Hope you are all doing well. Like, share, subscribe, all of that. We're looking forward to the first Market Bites episode of 2025 and we're joined by the two titans of the game, Josh Gilbert and Neža. Josh, how are you? How was your festive period?
Yeah, I'm very good, thank you, Sam. Yeah, it was good here. Popped back home to see the family for a little bit in England, which is always nice. It was very good. How about yourself? How was yours?
Yeah, good. I was just chatting to Neža before. I played quite a bit of golf. I mean, the conditions aren't ideal. But got out there, played some golf, ate well, drank well, but I'm ready to get back into it now. So yeah, it's good to be back. And Neža, you went skiing.
Yeah, I was skiing in France before Christmas with friends. So yeah, that was one of the highlights. And also during the holiday, we had snow here in Slovenia. So it was really like winter fairy tale and we had a great time, but it's good to be back. We were discussing before that we finally have some structure. So it's also nice to be back.
Yeah, I completely agree. Albeit I think for most people, Monday was the first day back in markets, as in a couple of days ago. And we had a great day. Risk performed well. And then you had Tuesday where it was going well and then it literally turned on a knife edge. So who knows what is going to happen for the rest of this week? Of course, non-farm payrolls on Friday, but it's going to be an interesting 2025. We'll talk a little bit about that. We'll also discuss resolutions for the new year. So let's get started. Josh, going back to 9 days ago, we're in 2024. If someone asked you what are your 2024 highlights, what would be your answer?
I think first up, I think we've got to say Bitcoin, right? I think hitting 100K is probably, has to be probably the biggest highlight. I mean, what a milestone it was, whether we go back to the year in general, right? Not only hitting 100K, we had the acceptance of the ETFs, which I think was a milestone moment. Then we obviously had the halving coming in as well. We had bigger institutional interest. Trump obviously getting back in, pushing the price back up above 100,000. I think that really goes to show that it sort of deserves a place in a diversified portfolio. If it didn't already, it sort of solidified that in 2024, I think, and hitting that 100,000 mark, which, if you'd have asked people that many years ago, then, they wouldn't have believed you in the slightest. So I think that was probably one of the biggest milestones. But I also think, just coming back to it, would be also the performance of the Mag 7 again. Just huge again. I was looking at it throughout the start of this week because I'm doing a little bit of work on Microsoft at the moment. A lot of people, I think we go back to the start of 2024 and look at sort of what analysts said. A lot of people were talking about that rotation out of the Mag 7. How much do they sort of really have to give? What did they give up in 2023? 75%. And then they've sort of done it again. So a 50%, almost 50% return in 2024 after that 75% in 2023. And I think the highlight of that for me is that it just goes to show that investing doesn't have to be too complicated. You can invest in the biggest 7 stocks in the world, and still outperform the S&P 500, in that sense. And again, these are the names that we use every single day in our everyday lives: Amazon, Alphabet, Microsoft, whatever it might be. So I just think that goes to show 50% return in 2024 and a 75% return in 2023, outstanding, and just shows that investing can actually be pretty simple sometimes.
Well said. Completely agree. Remarkable year. And there were, to be fair, many people this time, last year saying you need to diversify out of the Magnificent Seven. They've had their time. Yeah, they told you all. Neža, for you, 2024, what you got?
I did some thinking about it, and I would go with something more traditional, maybe. Everyone can remember gold's performance in 2024, and that was definitely one of the highlights for me last year, because its performance was not just good. I would say that it was exceptional. We saw it rose more than 25% in 2024, and it outperformed some of the major asset classes, set a new 40-year new all-time high at the end of October. So as Bitcoin, it showed itself as a strong diversifier for portfolios, especially at times of volatility, because obviously if we discuss some factors behind this growth, we saw central banks that kept investing in gold, and also some individual investors followed this trend, especially when markets got a bit shaky. Second, we had some geopolitical tensions all around the world, and gold tends to really thrive during those what is going to happen moments. And we had quite a few in the last year. Now, if we discuss what we can expect from this year for gold, I would be surprised if it would be as dramatic as it was last year. Because one lesson that we can learn from 2024 was that it was an exceptional year, but always surprises are out there on the market. And I think that performances of everything that me and Josh covered right now is like reminder for us that it is good to have diversified portfolio and to navigate different times that we are going through.
Yeah, gold was something that I had written down as well. I think a remarkable year, to be honest, and it's had again an interesting couple of days and to begin this week for 2025. But yeah, ETF I think has to be right up there along with crypto in general. 100K for Bitcoin in US dollars, and a remarkable run since another thing Josh mentioned, President elect Donald Trump obviously winning a landslide. To be honest, the S&P 500 closing at all-time highs for 57 times, which is again remarkable. And despite those rate cuts which started in September in the States and rising unemployment, the US still grew by 2.9%, which is again pretty good. And there was a lot of indicators that were consistently signaling contraction. Yet the economy expands. So I think that was pretty good. A great year. Neža, we were talking just before, weren't we? How that period actually from Christmas to New Year wasn't actually that good, and the S&P 500 still closed up significantly, back to back 20 plus years, which doesn't happen all the time. Josh, let's move on to some New Year investing resolutions. Is there anything that you're looking to do differently or recommend people?
I think there's a couple of things. I think, firstly, I think for me, what's been really helpful, Sam, we've spoken about it on the podcast a few times, I think with Neža here as well, is that just that automated investing, right? Just setting something up. We do it already. I do the S&P 500, Sam, similar to what you do as well. Just making sure it's coming out every single month. Again, going back home, I spoke to a few people. Oh, how do you invest? How do you do this? How do you do? Just set it up. Just auto invest it. Just set that up. Recurring payments into the account. It's very simple. So I want to do more of that, basically. Hold myself. I think it holds you accountable, even though we work in the industry, hold you accountable to keep buying that. Maybe it might be another ETF or something like that. But I think for me, the biggest one is actually just pulling the trigger. I think what I did is I sat back too many times waiting for a better price or a pullback, really, that never came. And I think we sort of went over it there, 57 new all-time highs for the S&P 500. You could sit there. You could have sat there for the whole year waiting for that pullback that ultimately never came. And I think a great example of this is I'm really outing myself here, by the way, but I've never individually owned Nvidia. I've never just owned the stock within my portfolio, which is shocking. But I've always felt I've been too late, or I've waited for a price that I just hadn't. They just didn't come. I'd set a price for myself. I'd set a limit order or whatever, just never came. Then the price rises again. Was up 170% in 2024. And I remember thinking that it was, I'd missed the boat in 2023. So I think if you've done the research and you like the prospects of the company, is there really much difference between a few dollars here and there? Of course, there can be something to be said for setting price targets. As I say, those limit orders, working out a level where you think is an attractive price, where you think there is value. And Neža probably talk to that a little bit more than what I can. But I think this year, for me, if there's a business I like at a reasonable price, then I'll execute. I think my opportunity cost has been pretty high this year. There was an ASX stock that I saw again at the start of the year. It just kept running. And then it would go up 10%. Oh, well, I've missed it now because it's gone up 10% today. The next day, 15%, right? So I think if you like those fundamentals, if you like that stock, I just think for me, mine is just pull that trigger because you could be waiting for that pullback for a lifetime.
I mean, I totally get where is this coming from, because missing out an opportunity on a stock like Nvidia can be a really tough pill to swallow. And I think that every investor is dealing with that issue, especially when you see a pullback, but the price is still above your buy point, and you decide to wait a bit longer, and then it only goes up, up, up. And I think that everyone can relate with that. But I would add here that focusing on past missed opportunities is just not the way to invest, because, as you said, you have to look ahead and look out for new opportunities on the market and just pull a trigger. So this is a great resolution for this year. Maybe not just hitting a gym and things like that, but also investing resolutions are an important start for of the year. But for me, actually, your resolution ties a bit with something that I'm trying to focus on, and that is strengthening my patience as investor, especially as a value investor. Sometimes challenge isn't just about pulling the trigger; it is also about staying in line with my strategy, especially when I see my portfolio lagging behind the overall market, and when you're seeing everyone making some quick gains, and you just feel like you're lagging behind. And this is the danger you have to look for. At least I think so, because in times like that, you can quickly make some emotional decisions and just jump into opportunities without thinking much. And I think this is the hardest part for me, for being a value investor. And I am really trying to work more on that and just to follow the strategy that I have.
Yeah, well, it'd be good if maybe we catch up again in 6 months just to review whether we're actually sticking to these resolutions or not. Because you mentioned one of the resolutions that a lot of people do, going to the gym, and I'm guilty of that every year. And then within a few weeks, I've already given it up. So let's hold ourselves accountable in 6 months' time. For me, the thing that I want to improve most is cutting losing trades earlier. Look, while I still appreciate you do need patience in investing, and most importantly, that comes to winning trades, really letting those winners and run, whether it be a trade or investment. I think that's actually one of the most important things. I want to work on cutting losing trades a little. I really do believe that my investment thesis is wrong, because that capital can be put to work elsewhere. Investing in China, for example, for me is the main part of why I'm talking about this, because it's been in a loss, it's been break even. Honestly, it hasn't done too much, and sometimes I'm sat there thinking, well, hang on, if I had this money in, let's just say, an Nvidia, then I'd be laughing, right? And while I can see, I think China at some point is going to recover, and it's going to be have a really strong year, and it's going to outperform other markets. It's not doing that right now. It doesn't feel like this year is going to be any different. So that's what I want to work on a little bit more. So it's a little bit of psychology. It's a little bit of capital allocation. So that's going to be what I want to improve in 2025. And I'm sure there's many people listening to this as well that have been, holding certain investments for a long period of time, and it's been in a draw. If you if someone went into their portfolio, removed everything, gave them the money back, would they get in that same investment? The answer is probably no. And I think that's a really good exercise to do, which Dan Ariely, who was on Conversation with Leaders a couple of years ago, told people to imagine doing. Let's get into 2025 though. Big year. In 12 days, we've got a new president coming through the door. That's probably going to have a lot of influence on what happens this year. What have you got your eye on?
I've spoken a little bit about crypto so far, so I won't dive into that too much again, but I really think that crypto is one that we've got to keep an eye on this year. We already know that Gary Gensler's pretty much out the door. We've got a new SEC chair who is going to be far more crypto friendly coming in through the door. So I think clearer regulation is going to allow a much better framework, a much better base for cryptos to sort of thrive and businesses to feel more comfortable owning crypto and just in general, crypto being used a lot more frequently. So that is going to be one that I'm definitely looking out for. I don't think we've seen the end of crypto's run yet. This bull run, I think, is still sort of just getting started. So that's something to keep an eye out for. outside of that as well, I'm pretty positive, and I think we'll have a better year for mining stocks. They've been absolutely pummeled over recent years. And I think, especially here in Australia, what we started to see is banks, financials do really, really well over the last couple of years. Some of the banks here last year, which are some of the, it's the biggest sort of weighted sector. Westpac was up sort of over sort of 60% here last year. So I think, their valuations are really getting stretched, moving some of them to basically all-time highs. Whereas these mining stocks, take BHP, for example, are trading at some of the lowest valuations that we've seen in over 10 to 15 years. So I think there is a case to be had for a little bit of profit taking in some of these sort of big financial names, moving into sort of some of those miners. Again, these miners we're talking about here are global names. Some of the reasons I think that might happen, again, China, we mentioned it, but it is undoubtedly the key catalyst. A lot of uncertainty still there, obviously coming from Trump, but there is a new stimulus measure that is expected to be rolled out early in 2025, not only to support the economy further, but also, as sort of Beijing looks to sort of try and mitigate this sort of negative impact from what may come from President Trump as well. So I think that would be a big boon for iron ore. I think BHP, Rio Tinto, Fortescue, these names, a strong Chinese economy is good for growth all around the world. Anyway, secondly, I think we've got a bit of a race on our hands as well to sort of try and secure key commodities in the energy transition. I think that only continues. The move to sort of decarbonisation will, I think, drive value across the sector. So I think copper, that's going to be playing a huge role in renewable energy, especially with the amount of power that AI continues to take up, the energy demands that it is ultimately, requiring. That's going to be really important. BHP has a solid exposure to copper, but I think they may look to increase that. We've already seen they've gone after Anglo American. So M&A activity can be a really big part of that. And then finally, lithium as well. It's a sector that has absolutely boomed and bust. So given the valuations of some of those sort of beaten down stocks, there may be some opportunities. Again, the valuations are there because of how much weakness we've had in the sector, how much uncertainty is there, China, EV demand slowing down. So there is going to be challenges. But I think we will continue to see sort of EVs and energy storage advancements coming over time. I think that demand for lithium will grow. Again, may still see that sort of weakness in EV demand maybe sort of stay subdued. That may put a dampener on prices. But I think there is some value in some of these names as we continue to see sort of prices trying to find a bottom, especially for sort of lithium. Rio Tinto just recently acquired Arcadium Lithium, which was one of their biggest deals for many, many years. And I think that's an early sign that there is, these big names, these big miners have been around for tens and tens of years, are clearly seeing a bit of value there as well. So as I say, that valuation does sort of reflect some of the uncertainty of prices also versus the cost of production, which isn't cheap, especially with labor and inflation, et cetera, that's happened over the last couple of years.
Yeah, I mean, I couldn't agree more. And all of that you mentioned is really linked a lot with stimulus is expected from China. And from my perspective, this is going to be one of the key themes in 2025, because if we see more of those and stimulus is being reflected in their economy, that could impact global economies, some global players, that China is a big market for them, and also mining companies, as you mentioned. But while China is obviously one of the key topics this year, probably, I would like to add something on US small caps, because I think that this might be their year to outperform, to shine, because unlike some large cap companies that rely heavily on global markets, they are more tied to US economy. And we saw that US economy is doing well. It is staying strong, and smaller companies, I think that they're positioned well to benefit from that, because one big reason to rebound are also mergers and acquisitions, because we see borrowing costs are easing. So we are already seeing some more activities, and smaller companies are often those prime targets for acquisitions, and this creates a value for investors and also more confidence into small cap companies. However, I also know that there are some challenges tied to that, because for one, if we see higher interest rates for longer, small caps are obviously more sensitive to that than their larger companies. And additionally, they might feel a bit riskier for some investors because they're not that well covered from analyst side, and it is maybe a bit harder to evaluate their true potential. But talking about that, we haven't heard from Sam yet, so it would be nice to hear from you as well. What do you think it's going to be one of the key themes in this year?
Yeah, I mean, it's interesting you mention interest rates there. We talked a lot about that at the back end of last year, and we discussed, views that maybe, we would be on pause for 2025. I don't think the case. However, there was a headline that came out yesterday after some of the hot US data that was saying, traders don't expect a Fed cut until July. There's no full cut expected before July. That was the headline. I think once you get the implementation of tariffs, that in theory is going to boost the US economy by encouraging sort of domestic manufacturing, though I think it's going to lead to cost of imports going up. But then in turn, that's going to lead to inflation rising, and then this could then lead to expectations as well. So I think it's going to be quite a topsy-turvy year, to be honest, for rate cut expectations. I think some weeks and months you're going to be seeing it's not happening at all in 2025, and then we fast forward and then suddenly you got, okay, now we're getting 2 cuts this year. So I think it's going to be an up and down year. The cuts that we did have in 2024, which of course started in September, are expected to continue and contribute to GDP growth this year. But of course then there's that reignite ignition, I was going to say inflation. And of course, you've got the main man coming in, and he was talking yesterday, Donald Trump, about interest rates are still too high. Not much has changed in those 4 years, but if he's going to be putting his foot on the pedal, he's going to be mentioning that time and time again. So I think he's going to almost force the Fed's hand to cut interest rates, and I think inflation will creep up as well. So I think it's gonna be a combination of that. I think there was an argument, I think at the back end of last year, that maybe they shouldn't have cut in December. However, I do think now once they've done that, you're going to see rates eventually come down again. I don't think it's going to be a pause for 6 months, and certainly not for the year. However, I do expect expectations to change quite frequently. Josh, on rates, I know last year we discussed the idea of a pause. Have you changed your mind on anything that you said back then?
I think what we've seen in the last sort of few weeks probably goes for my bold prediction that we might not get a cut this year, right? Again, I don't think that probably will be the case, but it's a bold prediction in the sense that maybe rates do stay on hold, right? And I think the thing with Trump is he's just so unpredictable. We really don't know what we're probably going to get, and I think that's why 2025 is set up to be one of those years that does make it quite exciting, right? Because he's a little bit eccentric. He's obviously got Elon Musk on, to the right of him now as well, which again, 2 eccentric men coming in at the helm, we really could see anything happen. So it may spark inflation again. We may not see those cuts coming through as frequently as you say. We may only get one. That may just be in the middle of the year or something like that as well. So certainly going to be an interesting year while he's at the helm, that's for sure.
Yeah, that's for sure. And but in the end, he is definitely trying to prove himself as the best president the US has ever had. So I'm sure that he will try to do everything he can to boost the economy. But in the end, we will see what happens, and it will be funny to watch this episode in half a year or maybe even earlier.
Yeah, for sure. Let's definitely review it, and we'll catch up about this. And yeah, 6 would be a good time to review everything that we talked about. Josh and Neža, as always, thank you very much, and here is to a great 2025.
Thanks, guys.
See ya.